Good morning, ladies and gentlemen. I will be with you. I should say we will be with you shortly. For those of you tuning in on LinkedIn and YouTube, remember, if you want to watch this in the background, head on over to Twitch. If you have the Twitch app, you'll be able to put that in the background on your mobile device while you do your work. Unless you're a YouTube premium person, then it'll work. But most of us aren't, because we pay Google enough as it is. But I think it's that time to get the show started. Good day, everybody. Welcome to DYOR Live. My name is Tom, otherwise known as Striking, here in the digital media world. It's August. No, it's not August. It's September. It's September 1st, 2023. It's September 1st. It's a special day for me. It's my grandfather's birthday. If he was alive, he'd be about 300 years old. Actually, I'm kidding. He'd be about, I think he'd be 99, maybe even 100 today. Fought his way across Europe a whole number of years ago and survived to create one half of the Herlihy family. Well, the Fowler side of the Herlihy family. But today would have been his birthday, but it's not. But it's his daughter's birthday, my Aunt Grace. It's her birthday, had the same birthday as her dad. And I just thought I would reach out to my grandfather wherever you are. Anyway, the body of today's show, what did it say? It said, not much going on, but a weekend review. And what are we going to see what's coming up with next week? It's going to be a long weekend. Everyone's hitting the road, probably in the U.S. Everyone is on the road already in their gas-guzzling beasts and things like that. But here in Toronto, where I am now, we're at it. And I got Pedro, the crypto chart analyst, as usual in the background here, ladies and gentlemen. Pedro Garcia, welcome to the show.
Hey, brother, how you doing today?
Good. What's happening in the great land of Pedro?
It's going well, man. I was quickly getting in and out of my car when I was putting my satchel, not my fanny pack, it was my satchel.
It wasn't your purse?
Or purse. It was not my purse. It was my satchel. And I was putting it in the car as I was talking to a friend of mine. And I here's the thing. I don't understand why I did this, but I put it in. I closed the door. And for whatever reason, I did not move my pinky. And I crushed the top part of my pinky. Oh. And I was trying to tough it out. Wow. Oh, yeah. Pain. Yeah. Pain. And it's amazing because when you have this amount of pain, and I guess I crushed the top tip of it, so it's like shattered, and I was just trying to tough it out that night, going, all right, yeah, it hurts, but I was like, I'll be all right. I've handled more pain than this. It got to the point where I was getting so much pain, I was getting dizzy. Like I was getting dizzy spells, and I was like, okay, I probably should check this out. And so I went to the VA, and it was, dude. My doctor tells me, he goes, yeah, that's dumb. You should have come in last night. But it's a good thing you did come in, because if a couple more days later, this would have turned to gangrene, or this would have gotten infected and turned to gangrene. So, yeah, we would have had to cut that off. I said, really? He goes, oh, yeah. So I saw him basically, I watched him do, he numbed my whole entire hand up. Then I watched him do the surgery, pulling out the charts and everything. And I was like, that is dope. He's like, oh yeah, man. And so he shows me the stuff and he goes, yeah, you're lucky you came. I'm glad you came in because we would have to cut your finger off. And I was like, oh, that's good.
Just from getting in the car.
Just from getting in the car with my satchel, not my merce, nor my pants.
Ladies and gentlemen, this is the entertainment you receive on the DYOR live morning show. Well, everybody can't have a perfect day, and sometimes you have to have a day in which you almost cut your finger off. I would say it's been a long time since I've had to worry about that. I think maybe never, but I think the last car I shut my finger in was a 1978 Delta 88. You know, a car about the size of the current city block now. And that, as they say, that was a long time ago in a whole nother world. We got to, just so you know, for some reason we've got like a 2-second delay here between when I speak and when I hear your return. So if the conversation seems a little awkward, it's because it's the round trip of the video software today. Anyway, Pedro, let me see if I can bring you up properly on the screen here now. As a couple of times this week, we have mentioned what the market was doing. Specifically, yesterday we had a whole show about what Bitcoin is doing, what the market is doing, but really what's causing it, people to have a big sense of hopium. And to FOMO pump the chart up, but when the market was wanting to go down and larger players were in fact pushing it down. And so we had that discussion, and that as they say kind of played out
shocking,
as we all know. Shocking, can't believe it.
Yeah.
And so I've got your charts up on the screen with the bazillion lines and wicks, and it's the John Wick of charts, as they say, because there's all the wicks on it.
I love it.
The John Wick of charts.
We'll call it the John Wick.
I'm not sure anyone can ever understand it except you, but that's why I get you to talk about it a lot. And so, give us a sense of what happened over the past few days. So new viewers watching this week in review, just like the 2-minute thing, saying where we started and how we ended up there. And what the charts are
absolutely
going to bring us for the next 4 or 5 days.
Yes, love it. So let's jump back to the previous month, right? As we look here real quick, back in July, we had a lot of not a lot of volume, and additionally to that, we had a huge push up with hardly any volume. So around this period, we were talking about I was expecting us to see a sell-off all the way down to the 25,000, and then from there seeing us come give me 1 second, I'll expand this so that that's all you guys see. So at this point, you can see here that we had this huge shoot up, we went sideways, and I expected us to come down primarily because we weren't really having a lot of green volume. A lot of the volume was dying off, and our ATR, right, we weren't really putting in a lot of big wicks. And I have a my own personal indicator that lets me know the average size of the demand wick and the supply wick. And as you were I was looking at, I saw more supply wick average higher than demand wick average. And so I sat there and I said, they're putting in more sellers than buyers. And in addition to that, the volume coming in for the buy wicks was very small in comparison to the sellers. So we're going sideways, and they're putting their position here up at this level of supply. So I expected us to come down much quicker, but it took about a month. So we saw then mid-August here, the huge sell-off, right, that we were talking about. Now, this past week, right, I said, or the past month, I was saying we're going to come down to this 23,000, then most likely see a shoot up again to retest the right, the break of the moving average right here, which is basically like a trend line. And so then lo and behold, we had some great news right? That came out this past week about the ETF that was created and was then signed in
The
by the
Grayscale.
SEC, which caused a bunch of, Grayscale. It doesn't matter. It could be, your mama kissed her dad and now they're back together. It is, right? It's just
Right.
news. It's just news to get people pumping. All right? I'm not joking, right? Pump it up, and so that's what we saw. And so everybody was sitting there saying, oh, we're going to push up. I said, we're not, because the volume in this candle was not even, and I said this yesterday, look at the volume. The volume is not equitable in comparison to it going up versus it going down. And so I sat there and I said, now look, and yesterday we were seeing the market right here. It was sitting about right here. And I go, if we close below the monthly 50-period moving average, which is right, which I think they're going to do, okay, then most likely we're going to come all the way back down here tomorrow or today and to finish off the month below. Around, and I said, I'm expecting this to come down to this level is what I said. I didn't say that in particular. But then from there, I said, if we close down here, we'll close below the 50-period moving average, which is this right here on the monthly chart. So just give me a second. So at that moment, you can see here that as we now start to sell off here, and I always talk about this in a very succinct way. If we move up, we're going to move down. And if we move down, we're going to end up moving up for the week, right? And so at the beginning of the month, if we're moving up or moving down, then most likely. So for me, I'm looking at this and I see that we came in, we tapped, we put in a wick here, small little wick. We went up for the evening and then now we're selling off throughout the day. So I don't know exactly this next point here, right? Because this is going to be a little ping pong, but you can see here that the majority of the moving averages are above us now. This is our 8-period moving average. And you're like, well, Pedro, why are you on the monthly chart? Because it's a new month. And then it's going to be a new week on Sunday evening. So we need to then pay attention to what is actually happening for the month and the week and the day in conjunction with each other, right? They may push the day up and the week up in the very beginning of the month, right? Like we saw here. Right, we saw this go up, and I said most likely we're going to see a sell-off towards the end of the month because we went up first, and then from there we saw the sell-off, and now we opened up even here. You can see there's an even open here, which people are like, that doesn't mean anything. It's a very big meaning. Okay, we opened up evening, we went up first, now we're going down. So if we continue down for this next week, which I do expect us to come to that 24, potentially that 20,000 mark that I've been talking about here, right? Then if we do see that, we'll see then throughout the month a rally back up. But if in the coming week or 2 weeks, we see it go down first to get buyers to go up to retest that 8-period moving average and that 50-period moving average that we're seeing here on that month and week, and I'll show you on the week, it's very similar. Then what we're going to see then is again another up part of the first of the month into these levels of 27, 26, because again they need buyers to step in so they can take the other side of the short. So, or they can take the other side of the buy for the short. So you can see here as now we're moving. Okay, and this is important. Second. Sorry, my people. I just
that pinky. That dreaded pinky.
I think the dreaded pinky is legit. It's no joke, man. It's no joke. I was shocked.
Well, it's just while you're figuring something out, let me just put a little announcement out there. Thank you to everybody watching on YouTube and LinkedIn. As usual in the mornings here, not a lot of people on the live. We get a lot of people watching on the social medias later, as they say. But drop a comment if you got one. Say hi. Anything that's fill this comment bar, especially while Pedro's looking at the charts. If you got a comment for him about this, or out of the other major tokens that he's likely, or coins that he's been watching, feel free to ask. And ahoy from down under, our hardware supplier says it's watching us on YouTube. Ahoy from AUS, otherwise known as Australia. They are plus 15 from here right now, so it's a good time there now. It's what, 2 in the morning? Okay.
Yeah,
thank you, hardware supplier, for watching.
It's
Appreciate it.
Morning.
Depends on which side. It's kind of a big place.
Thanks.
But if you got any questions from down there, we got a bunch of friends in Perth over there that are friends of the show, and a couple of friends in Brizzy, and then a couple of friends down in Melbourne and Sydney as well, and one straggler down in Taz. That's ones I remember. But as they say, thanks for watching.
Absolutely.
Let's see if we can put on.
That's awesome. That's so awesome.
Yep.
So I'm going to jump here to the week now. Now we can see here that we have that 8-period average, 8-period moving average on the weekly pushing down. You see here we have a big old wicker. These are a bunch of sellers. So buyers pushed it up, and then towards the end of the week, sellers pushed it down. So it is seller dominant. It is short dominant for Bitcoin. So most likely what we're going to see in the next, and I think this is what's going to happen, we're going to open up. Again, this is all entertainment and educational purposes only. This is all for entertainment. Please, that needs to be up. As soon as in the very beginning, we need to put that up from now on. Like, it just needs to go up.
Yeah, usually as soon as you start talking, I put it up, but I forget. Not financial advice, everybody, and that applies to the past 10 minutes also, and the next 10 minutes, and the rest of the month.
Absolutely. And indefinitely every time I talk, because I don't have my licenses. So if I don't have my licenses, this is all entertainment, educational purposes.
El no taco.
Purely. So here's the thing. So you can see here we have a big wick right here. This big wick will most likely, there's a bunch of sellers. So they'll probably push it up into the week that's coming up. They're going to come into this area right here, most likely in this area. See where we have the moving averages here, right, on the higher time frames. So we're going to go up, hit these higher time frames, get in shorters, because this is the institutional moving averages that they use. And then from there, we'll most likely sell off again.
Wait, which one is the institutional moving average?
Of the week. Weekly and monthly and daily. They're all
I see.
You know,
I thought you were telling me one of them was more important than the other.
Well, so the bigger the moving average. So if you have a 50 on a weekly, and then you have 100 or 200 on a monthly, right? These ones are so if you look at the when Bitcoin hit, when it went, it went from 67,000 down to was it 40,000, and then came up to 50,000. I think that's what it was, or was it 30,000 came up to 40,000? We had a 200-period moving average on the daily, which was basically the 50-period moving average on the weekly, and then the 20 on the monthly, sitting right there with a daily supply zone. And so I was actually in Moonrock Community, which is my project, the project that I'm a part of, and people were asking me, they're like, how far do you think it's going to go? I go, it's not going to go far at all. It's going to come and hit down. We're going to see it turn back around, because they weren't putting any demand weights. And at the time, the leadership of my project said, what are you doing, dude? And I go, I'm telling them the truth. And they're like, yeah, but then they're not going to buy. And now that leadership's kind of done their own thing now. So there's new leadership in that, but it was really interesting. And at the time, I was just more or less just like leadership there. Or not, I was.
Hey, if you don't tell them, someone else is going to tell them.
Voice. Yeah, and I want our people to be taken care of. So I told them, I said, it's going to hit that, and we're going to see it probably come back down to that 30, if not much further. And this was before we hit that. Came back down to the 20,000 mark down in here, right? And at that time, we were right. Oh, what just happened? Yeah. Sorry about that. And then
it's all right.
Left-hand issues. It was this, I believe it was this portion right here. This right here. When we came here, we sold off, and then we came back up, And I said, oh no, it's right here. Forgive me. I think this is where it was. Yeah, the 30,000, we came up to that 40,000 right here, and they thought it was going to continue up. And I said, no, man, look, there's no wig for this. And then we don't have any real substantial wigs until we get down to the 40,000 mark, because this has all been traded through. There's no real grounds until we get down to these levels here. That 20,000, which we saw the bounce, and that 15,000 is when we saw that bounce. And obviously we saw that. I honestly thought at this period we were going to come back down to that 14 and 12,000 mark. I was actually in the what was it called? The coin launch lounge with Brian, talking about this also, and one of the guys was like, "There's no way," and I said, "You want to put $1,000 on it?" And he goes, I'll bet 50. I go, watch him out, bro, because I'll take that money from you. And so I said, this is keep it a friendly bet of $1,000. And then sure
just
enough,
to quickly interject,
everybody, like,
a hardware supplier says honesty is always the best policy. Great job. And that was my comment referencing. You got might as well tell them charts say that what it's going to be. You know, there's always buying opportunities on the charts, and there's always selling opportunities, right?
Absolutely. So you can see here now we're having the same situation, right? We have come up. The market is starting to sell off again at the beginning of the month, which is a good sign, right? That if we're seeing a sell off in the beginning of the month, then we're most likely going to push back up towards the end of the month, right? But again, we still have a ton of these moving averages that we're going to have to push through, which is on a higher time frame. These right here are the monthly, and the weekly are still above us. And these have a bigger budget and have a lot more money to push the market around. So our only saving grace is really that weekly 50 below us. This is the one that's kind of holding things. And at the same time, we have a demand zone, which is basically where buyers, I call it a buyer wick. Okay. You can see at the same period in time, we have a 50 period moving average right here on that higher time frame, which is that weekly. So this is a strong area, potentially coming down to that 23,000 mark, and then seeing some consolidation. And then we could see a push back up again to that 27,000. And personally, like I've talked about this, remember at the beginning of July, I think when I talked about the yearly candle, right? And I said, look at the yearly candle and look how we don't have a demand wick on that. Right? Remember I talked about this right here, a very, very small one. I believe it was 50 points.
I do remember
right?
this.
And I said, look at the volume. Look at the volume in comparison to the volume of the previous year. Okay. We're halfway through it, and we're not even halfway through the volume, and we've been pushing up. So, and at that point, we're at these levels up here. At that 31,000 mark. I think it's just the 31,000 mark. And I said, it's most likely going to come up, push this area. We're halfway through the year, and we're going to see a sell-off. And they're going to come and get by the end of the year, most likely, I believe that they're going to push this market down to this 15, 12,000, 10,000 mark. I think they're going to try to push it down to the 10,000 mark area.
Man, you know what that tells me? That tells me that they're trying to margin call Michael Saylor. That's what they're telling me.
Yes. That's it. Dude, he has so much on the line here. Like, and that's all free money for him. That's all free money, free money for them.
Yep.
Because they have.
Yeah, his break-even point is like 20,000, something like that. So, well, we don't know his actual break-even point. The market's, is guessing that under 20,000, he is having issues, and he just bought another, $400 million worth of it a couple of weeks ago at the prices now. So if the rest of the market pushes it down there's going to be one big fat margin call for him.
And that's what I'm saying is, and then what happens? You have all those. Also, he has to sell off all of his at that 20,000, and they're going to be buying. And I'm almost positive if he has the margin call, we're going to see this thing come down. We'll see it drop easily to 10,000. Like I've said, 10,000, 5,000. They would love it down at 5,000 to come down into this wick right here. Right, this wick right here is a ton of buyers. So many buyers. 4,000 right here, man. see them push it back down to here, and then you would see one giant wick, and you would see such an explosion at these levels where it's just like, boom.
They'll eat up the supply. They'll just eat up the circulating supply, and the price will rocket.
Yes. This is what I told they're trying to do.
Yeah,
like,
I have to say that it's
to do.
Sorry about that. That little delay is causing me to interject in the middle of your sentences. But if you recall, the concept that I keep talking about is to get the price from 30,000 to 90,000 requires, $800 billion in liquidity and capital injected into the market, into Bitcoin itself. To get the price,
not necessarily. I keep bringing.
Well, I was gonna say, to get the price down to 5,000, and then shrink the market cap of Bitcoin down to, 80 billion, or 100 billion, or whatever it would be down there, and then 4x or 10x your money requires a lot less capital in the long run for the whole market to move.
Absolutely. The biggest key is that as we come back down to the end of the month, okay, biggest key is if we get below this at the beginning of the month, this low here, okay, at the beginning of the month, we're going to probably end up green for the month, okay. If we at the beginning of the month go up, okay, and we come back up and we test these levels up here, we're going to end up below here, this 200 period moving average on the daily. Excuse me, this is the 400 period moving average.
Okay.
And when that happens, we're going to see that 50 period moving average then really accelerate. In the stock market, when you see the 100 and you see the 400 period moving average intersect and go down, if you go back and you look at the majority of the times that we've seen this happen, that 100 and 400 period moving average cross where the 100 period goes below the 400, we typically have a major crash, right? And so it's one of those things that can be very precarious. They're already starting to come towards each other, right? And so whenever I start to see that, I sit there and go, that's not a good thing. So I'm going to use the S&P 500 here real quick, because this is really where you can really see it work in conjunction. So here's our 400 period moving average. You can see here that once you saw that acceleration, right, where that 100 period moving average, which is the yellow one, it comes in, you can see we hit it, we see a sell off every time. We see here again another 400,
I see what you mean.
And then the 200 period moving average. Yeah, we see the sell off. Then they come back and then they do a retest, and then we see another sell off. Again, we can go back in history and the charts, and I can show you every major downturn. Once I start to see the downturn of that, the 100 period and the down and the uptick of that 400, and I start to see it come in towards each other, you'll see it play. And so this is a macro technical analysis view of the market. And so you can see as it started to level off, right, and we sell below it, this is the portions that you always need to pay attention. And it will happen always like this at peaks. This was 2022 peak. Okay, and look, then we see it come down, and again, we see it happen, right? Sell off, come back, test, sell off. And then the sell-off, if we have a lower low, typically means two things. They are going to do a W, or it's going to continue down. So if people don't understand what a W is, it means it's like, all right, here's your one arm, your other arm coming down, a lower arm, and then it continues up, right? Boom, boom. Or that lower low then, and it all depends on that test of that 100 and 200 and what I see with volume. Because if the volumes are high with buyers, then I'm definitely going, oh, they're going to continue up. But if I see if that wick turns green and I see it, or if that wick turns red and with a ton of volume pushing down, they're going to put in another low again. So it all just depends on what's going on. Now, here's one thing that I'm really thinking about. One last little thing.
What's that?
They're talking about the a second lockdown. And
oh yeah, that's not going to fly anywhere. Yeah, that's just not going to fly anywhere. I can't imagine even one politician actually, except in some, countries where the politician is completely unchecked, like here in Canada or in New Zealand or something like that. I can't imagine anyone do. I don't even see anyone wear a mask anymore. Never mind worrying about COVID. I mean, it's.
Oh, where I'm at.
The governments don't have enough money to do it. I'm in Canada.
Well, that's the point.
You'll see the old lady. With the mask on, and an occasional person. But in the U.S., I haven't seen anyone wear one in Illinois or in Florida in months.
Well, you're talking about places that hold the title. You're talking about places that hold the title of "Don't tread on me," like Illinois.
Right.
Dude, don't tread on me. Same thing with Florida. Don't tread on me. So, but if you're talking up in the Northeast and the Northwest, where you have a extreme amount of, more liberals, they're still wearing them. So, it's not. Well, I'm just saying it. It's and the truth is as I'm looking at the charts, right? Like we're seeing a slowdown again. Like, look, here's that 400 period moving average. Right, We're seeing it right here on the daily. It's now, it's just, and we're coming in. We're putting in more short.
I'm gonna drop it back to the audience here real quick. Got a question. It says, what are your thoughts on the struggles of the average market buyer due to inflation, not being able to invest as much money in the market to push the buy volumes, or is what's going on in the market just large cash holders being able to do it? Meaning, is the average family is struggling because they have inflation has pushed the cost of everything up, so they have less disposable income. The wealthy, this really isn't affecting at all, this inflationary market and stuff like that. So the question is, will the market see a tougher time regaining its strength because inflation is holding it down? And I'll answer that question first. And the answer, hardware supplier, is yes, that is a problem. But it's limited to amount depending on the country you're in and the employment level. Because if you recall, even during the tough times, the people still, like here in the US, part of your paycheck generally goes into your retirement fund. And that retirement fund pushes that into Wall Street. And it goes into the major funds and all this kind of stuff, and gives BlackRock and Fidelity even more money. But that money, billions of dollars every week, goes into the market, and that's what always pushes. When you see employment being strong, that's what pushes the Wall Street up so high, because more retirement money's coming into Wall Street every week when people cut their paychecks. Oh, the dog, unbelievable. But anyway, so you see that money still coming into the market. Now, that being said, people do in tough times in the U.S. We can bring money out of our retirement for emergencies. People have all sorts of emergencies that are unrelated to actual emergencies. So money sometimes only becomes it turns into a wash. The amount of money coming in is equal to the money going out. But when you zoom out, the money going in is still more than not. And so the money's still coming in and pushing the market to drive up the market cap of the whole market by putting more money into it. But it is tougher. But if you've been listening to Pedro talk here, what Pedro has been saying is that the guys with a lot of cash know that everyone else is struggling, and they're looking for deals. And if they can push that market down, then they will. And that'll make better buying opportunities for them. But it also make better buying opportunities for you. So if you were wanting to get, buy a certain amount of Bitcoin or whatever, if you hang in there, you'll probably get a better price and get more for your money, and negate what inflation has eaten from you. What are your thoughts on that, Pedro?
Yes and no. I mean, the key is they don't want the average person in the market right now. They don't want people in because they want the supply. So they want you buying right now versus actually selling, because the reality is they're taking the shorts. And so they're going to manipulate the markets to go up to bring you into the markets in relationship to inflation. As we're moving into this period, I'm gonna put it like this, and I think the reason why we saw inflation, one, because of COVID stimulus checks, but at the same time here in America, you heard about the Great Resignation, okay? And what happened was people actually put money into the stock, or put money into crypto market, into micro coins, crap coins, right? Also other coins like Solana, Matic, major coins, and they saw 10x, 100x. Some of these people, they became wealthy. People literally retired, and the people who retired, this is a very important aspect to understand, was the lower part of the populace in America, meaning people who made $50,000 and less. In particular, I will start with the $30,000 and less. You almost had, I think it was like I think it was a 32% retirement. Those people put money into crypto, and you almost had 32% people from 30,000 and below retire because they no longer needed to work, because they were getting a higher yield of 5-6% in crypto when they would stake or through reflections. Remember reflections? So that's what happened. Then 50,000 and above, from 30 to 50,000, that group of people, I think it was like 24%, 23 or 24% of those people retired as well. So like when you look at the amalgamation of both, that turns it into, I think it was like 28% of the working populace retired because they no longer needed because of crypto, right? Literally. And this was during, and then COVID happened, and then everything happened, and it really, really hurt our working force. If you were here in America, you saw help wanted everywhere. People needed people to work, right? It was crazy.
Well, you forget a million people in the U.S. died also.
Yeah, it's true. This is true, but a lot of them were elderly, and the thing is, when you look at the numbers, and I'm not trying to cause an argument, but the same amount of people who normally die from the flu numbers were actually taken out and were replaced with COVID's number. And
yeah, it was like that for a while. I agree with you completely. Normally 50,000 people a year die from the flu in the U.S. But ultimately we had a million people taken out during that time, of which a lot would have died anyway. And I know they classified some people as dying of COVID when it just made their already shitty heart condition worse. There was obviously lots of reporting things, but a lot of there still was, when you just look at the overall number of deaths per year, it went up dramatically.
Okay,
in those years, however you categorize it. So the drive on employment, it really pushed employment.
No.
And thus helped push inflation because they had to pay people.
That's not correct.
Oh, come on.
So the majority of the people who died, and this is important to understand, the people who died, I'm in insurance. I deal with final expense insurance, okay? And that's basically people who didn't get life insurance until like 60 and above.
Right.
And the reality is this, I can't tell you how many clients of mine died, right? Companies actually started rescinding life insurance policies that I wrote 2, 3, 4 years ago. This is important this is real. Like, this isn't, and those people were people who were literally, and I hate to say it, on Social Security. They were on disability. The majority of these people get their money from the state. This is I wish, dude, the only reason why I know this is because I deal in insurance. And the reality is we saw an increase of mortalities between ages during COVID and after COVID between working class men of ages 20, I think it was like 24 to like 40. where you saw an increase of almost 400-500% of men dropping dead.
Ooh.
I'm not joking. You can go look at this, and it's and if you want to see the statistic, you can go through and check out the statistic through mortalities for working class people. In particular, it was men. Second, you also saw an increase in death of people who were literally already had major issues like diabetes, COPD, high blood pressure. And these people literally are people who are literally siphoning money off the government because they can't work. And so they get a Social Security and a disability check right? And then retirees who were tapping into the Social Security.
And then they didn't get that
so
check
it's like,
anymore.
Exactly. And so I say this because there was a lot of stuff happening that, and I'm not saying COVID, I mean, well, we don't need to go into all the conspiracy theory stuff, but I'm saying it like this. When it comes to the market right now, this idea is that the market is showing we don't have money coming in necessarily because of inflation. People don't have money to put into the market. And additionally to that, you also don't have money coming in it from your 401ks, because even your 401ks, people have, like, if you go look at it, people don't trust your 401ks. I was talking to a friend of mine who works at this other company, and the company said you need to, like, they didn't mandate it, but he sent me this letter. He said, "What do you think of this?" And I go, "That's crazy." Basically, they were saying if you don't, then they basically said you're gonna like hurt yourself. Like, you need to put money into the 401k. That means people aren't putting money into their 401ks. People aren't putting money because they're hurting so bad within the because of inflation. They just can't do it. So we're seeing a less amount of money put into 401k. And plus the next generation Z, as they come up, as well as Generation Y, they're not putting money into the stock market.
Right.
A lot of them, they don't. So it's like you're seeing less volume come in, yet the volume, if you look overall, is pretty much the same. So who's putting money in? The rich. And I personally think they're taking money out. They're shorting it. And then they're going to push it down. So I personally think we're going to see a major drop in the U.S. markets, right? Majorly. Right? We're going to see, I honestly see, and Michael Burr says it too. And Michael Burr just put a huge short. Michael Burr is the guy in The Big Short. I don't know if people know who he is, but
yeah.
He just put a huge I think he put in $800 billion in the S&P 500 puts. And then he put $700,000 into puts on, one was the Qs and the other one was the S&P 500. And I believe with the Qs, he put $700 billion worth of puts in the S&P 500. Like, and this all has to do with the curve, at least I'm not saying exactly that's what it is, but the yield curve, we see the 2-year, right, and the 10-year inverse of each other when it comes to the interest rates, right, and what's actually going on. There's so many things that are screaming almost a downfall. And now that, let's say we see a major downfall, in the same sense that Michael Burr and major hedge funds are planning on and putting in shorts on the market, right? They're sitting there and they're going through. And if you look at this, now we're seeing a slowdown big time in Bitcoin, where they want to drop this. They want to, like, they literally want to, because they want to get down at these levels here. Just being honest, like they want to see a drop in the market. They want to see it before, and then once they drop it, and then the next Bitcoin halving, which is in April of 2024, right? Some people don't think we're going to see an explosion. We might not. I don't know, but we're right here, right? So we're about that 6-month mark out right now. So with this same period, I think they're going to want to shoot it down to here, right? And then from this moment on, maybe in December, as they drop it down to these lower 10,000, 5,000 mark area, then we'll see the next huge rally. But they're going to be the ones in control. They're going to be the ones in control. And I say them, I mean the institutions. And this isn't the first time we've talked about this. I've talked about this.
Not at all.
Times.
No, we all know that that's what's coming. We know that.
Unfortunately.
All right, let's pivot. Let's pivot. Last, I don't know. I guess still got 10-15 minutes left here. So, one of the things I wanted to set up for the upcoming either next week or the next was I've been really trying to flesh out the topic, and I'd bring this up on my computer, but my desktop capture is not working again. Is XRP and CBDCs, and I bring this up not because it's of price action, and I don't bring it up because of everyone loves Ripple because they're taking on the SEC. I bring it up because we I don't know the right word. We have a dichotomy. We have a split in the market here with Ripple because they're doing two things, and the same people are loving them and unknowingly hating them. And I wanted to just kind of lay this topic out for, as we do a lot here on this show, as we start talking a little bit about a topic here and there, and then we end up talking about it more and doing a whole show about it. I try to get a guest about something, and then we pick at it for a while as we learn about it and flesh it out. And here's this is what I'm going to lay it on the line here with XRP. Everyone's loving XRP because of the taking on the SEC. And they've been fighting them. They've been fighting the good battle. They're like Braveheart out there. You just made the Braveheart reference yesterday. So that's such, everyone's like, yes, we love XRP. And you look at the internet, YouTube videos, and it's XRP. All the influencers are like, woo, XRP to the moon, all this kind of stuff. It's going to $1. It's going to $10. We're all going to get rich and die on XRP. And everyone loves it. And when you go and look at those same influencers, all their videos out that they have on their thing, they talk great about XRP, and then they talk smack about central bank digital currencies, of which I completely agree that central bank digital currencies are not a great thing. I mean, if the government wants to have some kind of token that they move large tranches of money around between the certain banks and that type of stuff, fine, whatever. That's just easy use and brings liquidity into the intergovernmental workings. But what Ripple is doing, and I'm starting to uncover this because I'm going through the lobbyist records in a couple of countries that have open records. It's all the news you see, and I had a bunch of news stories to have up here on the screen, but I can't bring them up. Here in Canada, in hardware supplier, if you're listening, down in Australia too. And in all the countries where you see a lot of talk about, and press releases and lobbyists writing stories and all this type of stuff about how the government is studying central bank digital currencies and we're moving towards one and it looks good and all these types of problems, but they can be overcome. Anything that's in a positive light, that's from Ripple's PR department. And they've hired lobbyists in every country. And here in Canada, they've hired one called the Web3 Consortium or something like that. Or actually, I think they may have put it together, funded the whole thing. I'm not exactly sure. Don't quote me on that. But they are funding all of this. And everyone now is in crypto is pretty much coming around and seeing the light and saying, hey, wait a minute. We don't want to go with a CBDC. All of a sudden, everyone realized, wait, the government can control how you spend it. They can take it away with a click of a button. If the government decides to tax everyone, the government needs money, and there's not enough money coming in from the repos, the overnight, borrowing from the market. Mm-hmm. They can just tax everyone 10%. Take everyone's wallet, 10%. Okay, all the government bills are paid, but you're shit out of luck. They can do all sorts of things to exert control. They can say, hey, we'll bonus your account, if you buy green stuff. If you buy not green stuff, it's a negative. It'll end up like being like the tax code because the government will be able to manipulate it. And the purpose of finance and money and currency is not for the government. It's for the people to get by. The purpose of currency is so people don't have to carry their goats and their sheep around with them to trade for food, and for other food and for wagon wheels and stuff. That's what currency's for. It's not for an arm of the government to do things or exert policy. And the reason all these central banks or central monetary policies came up in the first place was to soothe out the ups and downs of the emotions of the market. And there's all sorts of people that have PhDs that
Oh man, right now I am trying. Can you hear me? Hello? 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 No, you do. You do. You do. You do. Yeah. Can you hear me? Hello? Yeah, I'm here. Yeah, I'm here. I'm trying to see what's actually going on. Why? My computer, I was enabling it. Yep, can you hear me? Yep. So what was the question? No, I agree with that, dude. I mean, I do think that Ripple is not as good as they claim and what they're doing. It's not.
Sorry, I just got you back.
It's all right. Identify. 3, 2. What's going on? I don't understand why. And my computer screen just. I don't understand. There we go.
We got you loud and clear now, and I sorted out my audio problems when I yanked my my headphones out. It moved all my audio sliders over one, and so I manually turned. Now I screwed it up. Anyway, I went on this long diatribe about
okay.
I don't know
what was the question.
I know you could hear me, Pedro, because I use a different mic for you, yes. But the audience got back and said, "Hey, you didn't hear you the last 4 minutes." Anyway, the question was, they'd be interested to see a chart in stocks and/or crypto of the buyers and holders to see the percentage of holders of the average buyers versus whales over the last 10 years. So, a chart that's like, if the total market is 100, is 60% holders and 40% whales or big institutions, or what that is. And I don't know how to find that, or if that chart exists.
Actually through FinViz. So you go through FinViz, V-I-Z, FinViz.com. Oh, it's so hard to use. I can't only, so forgive me, people, because I only literally have one hand, and it's my left hand, and I've never been that much. I've never, I mean, I'm kind of ambidextrous. The problem is I haven't used it. So FinVi dot give me 1 second. FinViz. This is one to look at, so you can see it. I haven't been here in a minute, so give me some grace here. They've changed this up a little bit, so I gotta figure this out real quick. Portfolio, no. Screener, no. Home, no. Futures, Forex, crypto, backtest. Where is it at? Maybe NASDAQ? Maybe the XSPY.
Well, while Pedro's finding
1
that,
second.
I'll summarize what I was saying earlier.
Yeah, they took it down.
Was that we have XRP going around the world lobbying governments to put in CBDCs, because their technology, they can basically take their XRP technology and plunk it into a bank. And XRP is one of the few projects, or Ripple is one of the few projects that's gone through the certification process, the ISO, the quality things, the SOC audits, all that type of stuff, to be able to work in the banking system pretty simply without having a lot of pain and suffering to get started. And so they can get a country going pretty quickly in central bank digital currencies. And I was just, like I said, I had my news stories up. One of them just conducted a test. In fact, it was the SWIFT system conducted a tokenization test, and I believe that was with Ripple as well. And so my long story about this, before we get back to with the comment, was that we have the internet pushing the XRP profile of like, yes, that's taking on the SEC, everything's great, and then those same influencers out there are down on CBDCs, and but that's also Ripple. It's the same company, so they're high and low on the same company, and it's a very weird thing. And so I'll probably be trying to talk about that coming up here soon enough.
So I used to be, so this website I used to come here and look at it. Now, I'm more of a day trader. I don't really look at the large institutions in that aspect. I mean, I see them more through the wicks is how I see them, just over the years that I've kind of just, my subconscious mind have kind of just developed that, right? So that's how I see it. But there is a way to do it. So either on the Chicago Board of Trade, CM Chicago Board, CBCM website, you can sit there, and if you're willing to take the time, and I know there are also other charts out there through other organizations. I think free bar charts. I think they're another cool organization that does some dope stuff. Bar charts. Barcharts.com. Give me a second. I'm gonna see if I can pull this up here. ETFs, currency investing. I know there is. I think it was these guys who started doing it because they took over FinViz. FinViz kind of more or less went private. There were a lot of people who were using it. Let me see if I can go. Where are the commodities? Here we are. Come on. There we are. Corn, wheat. Where are they at? No, this is not it. Maybe tools. Give me 1 second. My people's here. Watch list, dashboard. So what I'm looking for is so it's going to take some math because I don't think there really is a chart out there for this. And there might be, I just don't know of it if it is. But what it does is it calculates, and this is the difference between crypto and the traditional markets. Right now, traditional markets, you don't know if it's who the primary people who are buying and selling, because it's there's shadow accounts that go through offshore accounts that buy and sell through major banks. And these are in and I think I was talking about this yesterday with, like, if you've watched Billions, and if you watch, there's this point where Taylor, who, you know, she branches off and does her own thing, and then Axe, the main character, comes back and basically says, hey, Knuckles, you messed up. We see you did this. You're not going to outright openly trade for us, but we're going to have you route orders for us, and we'll pay you a vig, right, for that. But we want you to do that, or I'm going to crush you. And so these are called boutique funds. All right, these boutique funds, and I don't know the details because I'm not in that world, but I know this happens a lot where they put in a bunch of money and they help support smaller firms, and then those smaller firms route orders through them. So it's really hard to see who's really doing it. And then also, go ahead.
We're just I don't know which screen tab you're looking at. We're looking at the bar chart with the menu open.
Yes.
The bar chart website.
So it is. So
okay.
Yeah, I'm trying to find this chart, and you know what I'm gonna do? I'll go through and see if I can find what you're asking. I know it's out there. I just don't look at it much. And we'll see. And then, you know what? And I even might just be on TradingView as well. I just haven't sat there and really looked at it. But within crypto, you can see that. We don't necessarily know who the people are, but we know the wallets, right? And so that's why we're always going through and we're calculating that. And we already know that, you know, we're dominant. We're right now, you know, there's an equal side of buyers and sellers in relationship to the market, right? Like I talked about this yesterday. In relationship to the long and shorts, right? Here are the longs, right? Boom, boom, on a weekly and on a monthly. We're not doing anything major, right? Like, even though we were moving up, we were actually moving down, people moving out, and there was an equal wash of trades, which so when you look at the markets, you want to see it as either buy, sell, or sell, buy. The reason why that's important is you can move a market up even though you're doing sell by based off the level in which you're doing. It's like volume. If anybody's ever had like a project, you can actually go through and manipulate the market by a very small amount of money, by making sure that you take both sides of the market. You're doing buy, sell, buy, sell, buy, sell, buy, sell, where you're pushing the market up, and versus sell, buy, sell, buy, sell, buy, sell, buy. Now, when you have a large portion of sell buys, right, that's when you see the big drops or the big push-ups, right? So we can see that here in this market, as the market is moving, that it's really more or less sell buys that are in control, right? Which is a push down of the markets, right? Here again, and I talked about this yesterday, right? Are we seeing more shorts increasing, right? And that it is a yes. Look, remember you talked about this. I said, look, guys, we have more buyers coming, or excuse me, not buy. This is the shorts. They're the shorts.
I'm sorry. What's the time frame?
Oh, I'm sorry. This is the daily.
Okay, sorry.
This is the daily. So we are putting in higher highs right here, or pardon me, higher lows, and we haven't necessarily pushed out this higher high here. But I said, because we're tracking it and we can sit there, this does follow the moving averages and what's actually going on. So the majority of the moving averages are up below us. Excuse me, I was going to say above us. Below us. And these are the shorts. So that means that it's predominantly looking, you can see how it starts to follow and find support off the moving averages. Even though this is a calculation of the shorts, okay, of coming in. You can see how, like this should, I'll put it like this. This should not work. I should not see a trend following here. This should not be happening. But somehow it works, where you can actually see a trend follow of the shorts coming in. And i.e., where we're at right now, we have the majority of our moving average below us, which means it is a bullish sign for the shorts. Follow me? At the same time,
right?
We also have a
the shorts
bullish...
mean they're going to make money when the market bears. It's bullish for people betting on the down.
Exactly. That they're trying to push the market down. We
If
also
in Vegas,
have
that
a
would be the
bullish
don't
sign.
Right.
And so, in the same sense, we're seeing a break of moving averages for the longs, because again, this is the long chart. This is tracking the amount of people who are actually just buying. It's not price point. It's just how many people are buying, how many people are selling, and they made it, or excuse me, in relationship to the shorts or longs. And you can see here, we're starting to break this moving average here. It's not following. So then we got to go to the week. And the week here, you can see that we're pushing here, but it's the end of the week. So I personally think it's in relationship to the oversight of the market, right? Remember how we had these huge push-ups in the market, right? From June, right? And now you can see this was the day that we had the sell-off, right? That we talked about. If this was moving, if we were really seeing buyers come into the market, right? We would see an explosion like we saw with here. Down in these levels.
All right, I'm going to clarify the question from our ponderer down under, as they say. So he says, I say he. I don't know if it's a he or she. So I'll say, Mr. Supplier, or Mr. Supplier, hardware supplier says. He clarified his question. I can't do the woke shit. I won't go woke. Can't do that. I'm just gonna say, hardware supplier. He's curious to see if more whales are if there's more whales in the market. Does that correlate to higher markets or lower markets? Logically, you'd think the whales would buy low and sell high, but interested to see that versus the BTC chart. And I think I'll try and summarize what you said to show you what I've learned. Is that the whales don't care if the market goes up or down, because they make money when it's going up and down, because the whales have enough money in the market to survive small margin call, if they're using leverage, so they can short the market and make money on the way down. But the whales are smart enough to know that they even though they have a lot of money, they have a limited amount of money. So instead of trying to push the market from 30,000 to 200,000, it's easier to push the market to 5,000 and then bring it back up to 30,000 and make just as much money. I think I paraphrased you well there.
Do here. Yeah, so I guess you can see the whale teller. No, this is just I'll have to play with this and see if I can find some charts on this. Yeah.
Well, hardware supplier, that's how we did the hook here. We'll get you to come back and watch again someday. I'm guessing late from bed.
There we are. There we go.
Oh wait, it would
dollar.
be
no.
What the hell time is it? It's not Friday. It's Saturday night there now, right? I don't even know what. Saturday morning.
It'll be Saturday morning, because I was down in New Orleans, or excuse me, I was down in Australia when I was on an icebreaker. I was in the Coast Guard. I went on the icebreaker down in back in the early 2000s, and yeah, I had a girlfriend at the time, and so I would have to call her, and I would call her here in the States, out in California. What was it? Steak Wells. Yeah. Well, I can't. Honestly, I don't know. I'm gonna say I don't know. I'm sorry, man, for that. But I will look into that. I know there are people who do track the wallets of whales and these big buyers, and I can't see them not creating a chart. I mean, You know, we have so much
Got it.
talent.
There's a chart for everything out there, right? No, but it's a great question though. Do when there's more whales, is it better for the market, or is I'm better for the for the price appreciation, or is it not? And I, after doing this show a lot and talking to you, Pedro, I kind of knew this anyway. I worked in the commodities markets as a youngster a long time ago. The market is so manipulated, and even when it's not, people are trying to figure out new ways to manipulate the market to get their little advantage. And that doesn't always mean moon boys pushing prices up. That can also mean pushing prices down. And frankly, if you have plenty of money to stupid dog again. If you have plenty of money to survive small fluctuations in prices on shorts and not reach a margin call, it's almost you can almost print money in these markets that go through long consolidation periods in which the market just goes up and down over a 5 or 10% range for a year or two. And so as like we say, make money while the market's hot, and you can make more money when it sucks too, if you just know how to do it right. You got to stick to your rules.
And you nailed it right there.
Yeah. I'll stop pontificating there, but Pedro, we're running to the end of the show here. We had a good show today. I don't mean we have to wrap it up right away, but I want to hit a few things to talk about. So I'm going to drop your screen off here for a minute. Just as a couple of things before Pedro and I get to the last topics of the day, or the last usual things of the day, or last comments, or whatever. I have to plug my friends at Swiss Asset DAO. They've released like I said before, they're following their roadmap almost to the day for reaching their or putting out the information they need to, getting established as an association and kind of becoming a DAO for other DAOs, or tokenization projects that need to become legal somewhere. They have the ability to do that, and they just, part of being a DAO is having an ethics panel and kind of an ethics statement and all that in order for large corporations or larger entities to be able to use your services. And they just put out their ethics thing, which involves not just a statement of the organization's ethics, but also an auditing method too. And so that outside parties can audit that and make sure they're complying. After all, these people most of them are Swiss Germans, and so they go by the rules and that type of stuff. And so they're making progress every day. And technically, as of right now, Swiss Asset DAO is open for business and soliciting other groups, not soliciting money, securities, finance, anything like that. They're not licensed for that at this point. That's someday down the road. They're soliciting other DAOs in order to plug their legal structure into them, and so they can have a legal home rather than doing all of this. We're Canadian, but really a shell company in Panama. They'd rather them sign up to be part of an actual legal organization that is a DAO, and do it. It's hard to, at this point, it's hard to explain the ultimate customer for them. But somebody like MakerDAO would be a good customer to come and say, all right, we need a home in Switzerland too, so we're gonna hook up with these guys. But every week they have a community building and a legal work stream that's open to people that want to participate. And so I always pitch, please go find them on this website here behind me, SwissAssetDAO.org, and you'll find a link to their Telegram. They don't have a Discord yet because they're not that big of a group yet, so Telegram's still easier. But the company the DAO is up and running and starting that process to solicit customers. So it's a good thing. And then the other thing we got going on, let's see, where is the YouTube? My channel videos. Well, there I am. All right, so things we have coming up next week is this one. No, it's got the it's got my promotional video on it. What we have next week is we have a great guest in that of Caitlin Long of Custodia Bank, and I'm pushing this out there to get as many viewers as we can, because this is as I call it, it's our marquee event for DYOR live here, and there we go. Notify me. Yeah, I thought it was going to put the whole thing on the screen nicely there, that it's not. But what we're doing is we invited Caitlin on the show, and while we have a small show here that doesn't have a big reach, she's been on a lot of really big shows with 50, 100, 200,000 viewers or subscribers, and getting thousands of views. We have a much smaller channel here, but I asked her a little different question than other people. The other people tend to just get her on a show and just let her ramble about every topic that she's amazingly an expert in. But we wanted to focus that. We wanted to focus on it and kind of figure out what the market doesn't understand. And so what has Caitlin learned? And I call her by her first name, even though I don't know her. So what has Ms. Long learned since being rejected by the Fed to now? And the market is not the market, but the world of banking is coming to grips with the fact that that the outsiders didn't know what the insiders know, and that's the same in every industry. But with the Fed, they didn't realize that it was very capricious in how they chose member banks, and there's arguments that they don't even have the right to deny people. In fact, the law actually says that the Fed has to set up master accounts for state chartered banks. And the Fed likes to argue that and say, well, we have to be able to, keep risk off. And the law also says us to manage risk. So she's learned a lot. And in my trailers, if you watch the trailer or read the trailer, it goes on to say, or I go on to talk about how things have come to light about how the membership process, and the reasons the Fed gave were because she was involved in crypto. She couldn't get FDI insurance, so she automatically can't be in the Fed. But she wasn't going to need FDI insurance because she was fully collateralized and not a fractional banking company. And a host of other small little things that are like, wait a minute. And then when the member roster for the Fed kind of had to come out from another lawsuit unrelated to Custodia Bank, it revealed like fintech companies from Europe that have a Fed master account that have no FDI insurance, are not a state chartered bank, or not. It looked like wait a minute, what's going on here? So a lot has been learned about that, and so we wanted to focus our interview on that topic and really flesh out how, since we've learned all this stuff, is that enough information for banks like hers, which deal in not fractional banking, but deal in fully collateralized money or deposits, and crypto fully collateralized. Can they go back to the Fed and say, hey, all right, it's time for all this to become illegal. You have to accept us. So that's kind of what we're doing. That's on September 6th, Wednesday, September 6th at 10 a.m. Eastern, 4 p.m. Central European time. And whatever time it is down in the future down there, hardware supplier. And there's Michael Ray here from Swiss Asset DAO. I didn't see your comment earlier, but thanks for watching and that type of stuff. And the hardware supplier. Thanks. Cheers for the chat. Mike says, thanks for covering what we do. Non-Swiss members open. Non-Swiss members welcome with open arms. Yes, and I'm a member of it too, and I'm an American. And so you can be, so long as you have some connection to Switzerland at all. And my connection to Switzerland is just talking to them on Google Meet. So that kind of stuff. Carlos Salinas, thank you very much for watching. Appreciate it. Appreciate it very much. I'll talk to all you guys again in our next stream. But Pedro, before we wrap it up here today, got anything else to talk about? Anything else going on in the world of Pedro, or that you're looking for in the markets that might affect what's going on in the next couple of days over this, or in the beginning of next week there?
Yeah, so I think one of the things I'm definitely paying attention to for myself is honestly like news coming out. Because we are at these levels here, they're gonna need some type of news, whether that's BlackRock deciding to pull its plug on crypto, or like I do expect some tumultuous news coming out to get the markets to move, because they need to scare the populace. That's what they do.
Right.
So that's kind of like what I'm looking for. So for you guys to be looking at when the market starts to see sell-off opportunities, right? Look for these levels here that I've been talking about, like that 20,000 mark, that 24, 22,000 mark. I do see September and October as are notorious for
I don't have your screen up,
like,
just so you know.
Well, just go back and just do a chart analysis with the S&P 500 and go look at October's, go look at September's, and you'll see what I'm talking about, especially when it comes to tumultuous times. We typically do see the markets typically do sell-offs during this period in time. So I am looking for something like that. And for me, price points, I've been talking about these levels for Bitcoin, right? Which has been, again, it's going to be the same thing. I'm almost parroting. It must probably get annoying to the people who are listening, right? Even though it keeps happening, right? Like I'm not, we've seen, like, I don't know, it's going up. No, it's not. We went up to go down. So yeah, that's it, guys.
All right. Well,
biggest thing is,
well, it's a Friday here, where Pedro and I are, and I'm in Toronto and Pedro's in the eastern U.S. somewhere, and that means it's coming to the end of the day, one of the last holiday weekends of the summer. So Pedro and I have talked long enough, ladies and gentlemen. For those of you in Europe watching, I can't thank you enough. It's Friday at 6 p.m., 7 p.m., wherever you are. Thank you very much for tuning in. I love spreading the message over there and getting you guys to listen to us Americans, our viewpoints on things. It's fun to talk about that, and I like it when you can listen to our discussions and how they may be a little different than your discussions. And but ultimately, we're all here for one reason, and that's to make a little money in the markets. And try to make everything a better place for everybody. We're going to try and do that next week with Caitlin. I can't say it on the show enough. And all I can say is, Caitlin, I hope you're not going to cancel. I know your schedule is busy. I promoted the heck out of this. So please, no canceling. But anyway, once again.
And if she does, it's okay, because the reality is I think we're producing great content. We're giving good TA. We're giving amazing news sources. And also, you're doing amazing when it comes to Wrecked and Ruined.
Yeah, let's not forget I gotta start putting out a few more episodes of Ruined and Wrecked. That's one of my favorite things to do. But I've been so focused on these morning shows that I haven't been doing that. And I can only do so much because real life interferes and says you got to do other things. But for Pedro Garcia, the crypto chart analyst, and my name's Tom, otherwise known as Striking, here in the digital media world. Thank you, everybody. We'll be off this weekend. We'll be back on Tuesday with Zach Humphreys, also a live streamer and heavy in the SHIB world. He's got a big following, and he'll be on the show to talk about the markets, SHIB, and everything else that he likes to talk about. We'll have a good, long, rambling talk with Zach. And then Wednesday, we'll have Caitlin on here, and Thursday I'm trying to line up another guest in the legal community to talk shop about these various lawsuits that are been settled in the media or in the courts lately, and hopefully that will bring everyone to the show. And also thanks again to Audit Chain, been sponsoring my show all season. Thank you very much to Jason Myers at Audit Chain and all of that for, as I say, sponsoring all the original programming here at the DYOR Media Network. Pedro and I have gone long enough today. That means we are out. So see you next week. So be there.